What's going on, YouTube? Welcome back to Stocks by the Numbers, and again coming to you with another positive update here on a company that we have been talking about for several months, just waiting for the breakout, and boom, now we're living it, baby. Name of the company, Fubo TV, ticker symbol FUBO, listed here on the New York Stock Exchange. Company $2.21 a share, up 30 cents on the day, almost 15.75% pop out here. And again, we're going back to just to review the entire story of what happened. We found Fubo, and it was over here at the 140, 150 range, whatever it was. I said the company, in my opinion, was undervalued. I would buy it. Of course, it immediately drops 33% to around sub $1 range. I said again, if I like it at 140, 150, I absolutely love it here down at sub $1 levels. I would go in heavy here at these levels. And, of course, it bounces up roughly 30% back up to $1.29 and then flattens out and consolidates and remains flat going into earnings. And, of course, Fubo, again, consistently increasing revenue quarter over quarter, year over year, and pops and breaks out, goes from the low ones to the low twos, giving you essentially a 100% return coming out of that earnings report, and it took only about 4 or 5 days. Then the company began to pull back and sell off, bouncing off this key level here of, what was this, like 169 that we spoke about, and it was bouncing around, and it was dropping and consolidating into our descending wedge. I then made an update video talking about the descending wedge and that the stock was going to break out and take its next leg higher, and that is exactly what frickin' happened. And the stock went from, again, about like the 160, 170 level and broke out of the top trend line and is now approaching almost 2.25. But I do want to show you guys that we could potentially have a little bit of a slowdown here, because if we switch over here on the one-day chart, you can see multiple fibs at 221 and 222. On the 5-day top fib there, 223. On the 1 month, it has absolutely flown. But here on the 3-month, you can see the fib level, top fib 229. On the 6-month, top fib 227. Year-to-date, next fib 224, which is basically right where the stock is right now. On the 1 year, next fib is 224. So we have basically that's the range right there. This 222 to like this 227, 229 range. This is going to be huge for the stock to tell us where it potentially wants to go here in the short term. And of course, if we back it up here, this purple trend line I drew is potentially the next level that the stock is going to get at. You can see multiple candles, multiple different time frames coming down and bouncing, supporting or resisting off of this level, which is roughly like that 238, 240 level. So inside of these next 20 cents or so is really going to determine where this stock is going to go. However, right now, absolutely breaking out. And again, quick recap here. We absolutely nailed this call. I can't get over it enough, because obviously it bothers me more because at the time, I've been mentioning to you guys right now, I am not really trading or investing in the moment. I took all liquidity and put it into the new house. So something like Fubo I was not involved in when I knew I should have been involved in. And, you know, you could probably sense it in my voice here by my tone that I'm a little upset at the situation, because I knew it was a buy at $1.50. And even though it dropped 30%, again, if I had more liquidity, I absolutely would have been adding this entire time in the situation. And right now, I would have lowered my cost and probably have been up about 100% on the position. And it all happened within a couple of months, not even a couple of years. So remember, think back in the day, it used to take several years for someone to see even 40, 50% growth. Now you can get it inside of a couple of months, or even potentially inside of a couple of weeks, depending on the situation. But Fubo, again, I still think it's a winner. Revenue keeps climbing. Follow the money. That's what I always say. Work smarter, not harder. We had a company consistently beating on the revenue side and growing its business, and the stock was just getting completely beaten up. So it's like we always say, that's the Buffett method. We're looking for good companies who are healthy, doing decent revenue, decent business, slowly growing, who have gotten beaten up and are now undervalued. And those are the stocks that we take positions in, because what goes down must go up, and vice versa. What goes up must come down. Looking at something like a Tesla just climbing, 3, 4, 5.5% every day for, I don't know what, like the last 15, 20 straight days or something like that. It's hard to time, but what goes up must come down. And if you can buy time on your puts, a situation like Tesla, it's inevitable, in my opinion, that that stock is going to pull back because it's really just getting out of control. So if you have the liquidity to buy time on the options, you can be very successful. If you're sitting here as a small investor or a first-time investor and you have like $500, $1,000, and you're trying to position it somewhere and you don't want to lose it, but you want to see it grow over the course of the next couple of months, you have to find companies like this. You have to find companies like the Fubos of the world. The companies that a lot of people are familiar with, again, that we see business growing, revenue increasing quarter over quarter, year over year. The stock is in a downtrend. And again, yeah, you bought it here at 145, 150. Yeah, that really sucks that it drops down to $1. Believe me, I get it. But again, you knew that earnings were coming up, and you basically knew that this company was probably going to consistently keep growing and come in above estimates and then have a pop out, and that's exactly what happened. So again, we do have some resistance here with the fib levels, again, anywhere from 222 to I believe it was about 229. So the stock may be bouncing around there and reject even in the short term, or just sausage out and remain flat for a couple of days or weeks before it breaks out and takes that next leg higher. And if it could get above those fibs, again, next level about 239, 240. But switching over here to the daily, you can see that the stock has climbed up and broken out above that top Bollinger Band. And look at the 50-day here. It was dropping all the way down to looks like about 130. Now it kind of climbed up to about 150. Now remember, over time, if the stock could remain steady or even slowly climb, that's what happens to the moving averages as well. And now you have a potential new support level down at 150 as opposed to 110 or 125, whatever it was. And believe it or not, that is huge for a stock like Fubo right now. The MACD obviously has crossed and has been climbing higher. The stock has been tearing. This 200-day moving average on the daily, 243. I'm not saying it's not possible, but again, we're talking about another 10% move after this pump, and I just don't know if it's going to happen immediately, right? I mean, it could happen tomorrow. Chances are probably not, in my opinion. Look at the RSI here on the daily approaching 69. Last couple of times it got to that benchmark. It did hang out for a little bit, but then immediately pulled back and had a big chunk sell down. So that's why, just kind of giving you a heads up. If you're asking, should you buy it now at 220, if you do get involved and it does begin to sell off, it is actually justified in this situation. So if you buy it tomorrow or now after hours at 220 and the stock is down a few days and it's at 205, I don't want to hear it, right? I'm trying to always tell you guys about the risks involved when you step into a situation. But, of course, could keep going higher if there is a lot of buying happening, but chances are we'll most likely take a breather here very soon. Here on the weekly, though, the RSI, even though it has been climbing, it's only at 53. So that's why I'm saying it could just cool down and take a breather for even a few days and have those RSI numbers and all those other figures and metrics on the daily chart just readjust and reconfigure themselves, come back down to earth a little bit, and then it could take the next leg higher, and it would be justified looking at the weekly chart as opposed to the daily. But of course, the stock has been rising for the last couple of weeks, so the MACD is now slightly rising, looking to separate itself and maintain that bullish pattern. So again, long term, I do still like Fubo. I think it's a screaming buy, actually. The stock should easily be, I don't even know. The company's bringing in $300 million a quarter. Look at this. Going from 200 and change to 300. Look at that. $1 billion in revenue last year. And now at 300 million, I mean, if we extrapolate that and they maintain this level, even the low threes, you're talking about like $1.18, $1.22 billion for the year. And if we switch over here, we can see a market cap of less than $650 million. So again, this is what I mean, right? This is why anyone out there who thinks Fubo should not go higher really cannot justify it to me, right? Because I understand that certain stocks in certain sectors move more than others, whether they pay a dividend or not, right? This company is technically a technology company, and they do not pay a dividend, right? So now It almost falls into the category of a Tesla or an Nvidia, right? If those companies could trade 10, 20, 30 times yearly revenue, why can't Fubo? Why can't Fubo? How about this? Think about this. How about Fubo trades in line with projected revenue for 2023, which again, as I just said, is about like 1.2 billion. Well, that would be a double from here. So now we're looking at a stock that's 440 a share, 450 a share, right? And again, we're being conservative. We're being conservative. If it trades 2 times yearly revenue for 2023, that would be a market cap of about 2.4 billion. That's a 300% move from here. Now we're talking about a stock that's worth 6.5 a share. So again, we're speaking conservatively, looking at these multiples conservatively. Because again, something like Nvidia, the company brought in $8 billion for the quarter, and it has a $1 trillion valuation. So that's what I mean. Once you back these traders and these investors into a corner who want to pat themselves on the back, acting like they're some sort of financial guru because Wall Street took Tesla and Nvidia because Wall Street took Tesla and Nvidia to the moon when they didn't deserve to be there, you can't look at these other undervalued stocks that I'm bringing to the table and try to explain to us that it's not going to happen the same way. Our Fubos, our Safe Bulkers, our Daskis, our Rolls Royces, right? Our STEM, our Soundhound stock, right? I mean, the list goes on and on. Again, Goodyear Tire, I keep mentioning. One of the few stocks I've seen that is basically consistently growing its footprint and its business year over year. Revenue has been climbing like crazy annually for the stock, and I think they brought in like 20 billion in revenue last year. A company has a market cap of 3 billion in change, right? So that's what I'm saying. If it's justified for the high flying lucky stocks that you're holding, well then guess what? That's the rule, right? Not the exception. So if that's the rule, then guess what, people? You all, in my opinion, should be loading up on the Rolls Royces, the Fubos, the Goodyear Tires, because let me tell you something, these stocks are going to move several hundred, if not thousands of %. However, again, coming back to reality, we see, looking at the numbers, that stocks like Nvidia and Tesla are extremely fake, not realistic, and honestly, I wouldn't invest into them. Even if you tell me right now Tesla is still going to be up, every day for the next 20, 30 days and it's going to climb up to $300 a share, I wouldn't feel comfortable buying it because I know that even up here at 258, the stock is massively overinflated. So whether it gets to 300 or not is irrelevant. I originally spoke about in a previous video on Tesla looking at technical analysis. And everyone always tries to tell me, oh, it's not about the numbers nowadays. It's more about the charts and the patterns. Okay, fine. There was a gap up on the Tesla chart back at $84 a share. And the stock continues to climb and is now up at $258 a share and has basically been raging for months. But I thought gaps always fill, and the market's all about technical analysis, right? So how come the stock didn't pull back and fill the gap at 84 before taking this next leg higher? And that's the main point. Certain stocks like this are overinflated in the numbers, and the charts are even showing you that the shit could hit the fan one day. And it could literally happen tomorrow. Now again, you could buy an Nvidia or a Tesla and just have it continue to climb a little bit, and you can just ride the wave and make money. But again, in that situation, you are hoping that an overvalued, overbought stock continues to climb higher when it shouldn't. When on the flip side, again, you have your Rolls Royces, your Fubos of the world, who should be higher, right? So, again, as a financial advisor, you can't really use the word like guarantee, right? Nothing is guaranteed in this world. I just want to let you know, if you buy shares of Fubo, the company could go out of business tomorrow and the stock should go to zero. You need to understand the risks involved. However, at the end of the day, if I called you on the phone as a licensed broker right now and I was pitching you Fubo stock, if I told you how I honestly felt about the company, it'd be highly illegal and I can lose my license. That's how I feel about Fubo. So in my opinion, stocks like Fubo are screaming buys. And if you're positioned in a company like an Nvidia or a Tesla, and you've been riding the wave, even if it's for 1, 2, 4, 5 years, if it were me, I would most likely be looking to liquidate those positions and reposition into stocks like this one that we're looking at here. Because again, over the course of the next 2-3 weeks, if Tesla drops from 258 to that gap fill of $84, as much as it might hurt and you might be all upset, guess what? 110% justified. And same thing with Nvidia. Nvidia ran to the moon. It shouldn't be anywhere near that level. And, as long as these companies just mention AI in a conference call, you guys just jump in and think they should be overinflated with these valuations. And it is just despicable, in my opinion. When you have phenomenal stocks out there, like your Fubos, like your Goodyear tires, that should, hands down, be worth more than they are worth right now. That is a fact more than it is an opinion, really. But hey, whatever you do with this information is entirely your own prerogative. I'm sure people out there are still going to pile into the Teslas and the Palantirs of the world, and they're probably going to make money, and I'm probably going to get some slack for saying this, but they're going to continue to make money that they don't deserve. But at the end of the day, I would much rather do it this way because, again, I knew it was a buy at 140, 150, and then when they cratered it down to $1, in my eyes, it was a guarantee, basically, to step in and buy shares and make money here off these levels. And now you are sitting pretty, just getting excited and salivating, looking forward to not only the next earnings report, but the next 1 to 5 years of where a stock like Fubo could bring you. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, like the video, share the video, thumbs up, algorithm helps me get more eyes on the channel. Subscribe to the channel. It means a lot to me watching the community grow. Again, about 20% of my viewers are subscribed. The average channel on YouTube only gets about 10% of their viewers to subscribe. So we are doing twice as well as the rest of these schlubs here on YouTube. So that's all you guys, though. Keep it up. I appreciate that so much. And moving forward, like I always say, if you have any, moving forward, like I always say, I want to wish everyone success. I really do. Whether it's a stock you're buying that I don't agree with at all, or it's something that I gave a recommendation on. Whatever it is, at the end of the day, the goal is to be in a better position today, tomorrow, than we were yesterday, 2 days ago. So whether you're following my strategies or not, if your portfolio is growing for yourself and your family, fantastic. I am so happy to hear it. But again, I understand that markets are rocky and volatile and uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'll catch you guys in the next video.